Today we want to talk about health insurance, and as I've disclaimed on all the previous insurance videos, this is part of risk management. It's taking care of things, affairs, in case things happen. So let's dig a little deeper, but I will disclaim this as well. If you do have your trail map, if you've done a plan with AllGen, it goes high level on your trail map, as you can see on the screen, whether you have health insurance or not. And this is the video. This video is supposed to support that. If you haven't done a plan with AllGen, that's okay. You should know you probably need health insurance if you don't have any. So I can give you the answer on your trail map right there. But this video will still help in helping you determine some considerations and how to get specific within your circumstances. So that being said, a disclaimer. There's so many factors, so many types, variations, new legislation that affects health insurance and coverage every year. We will not be able to go into that in full detail in this presentation. We highly, highly encourage that you go visit a healthcare professional, well, not healthcare, but a health insurance professional that can really get deeper into the specifics and nuances and the particulars of your circumstances. So that's a disclaimer. This should give you some good leverage as far as talking points in that conversation. So what is health insurance? Health insurance is insurance that protects you from high medical expenses when you do get sick. Even when you don't get sick, potentially, depending on what type of care you need, health care costs money. Okay, so health insurance is a way to offset the expenses associated with health care. Okay, it covers a percentage of your health care costs beyond a certain amount. Again, depending on what type of policy you have. So again, absorb some of the financial impact that healthcare, especially unexpected healthcare expenses, can be a burden on your family. So that's what health insurance is. Okay. Now, why is this important? Because sickness is a fact of life. Okay. You get sick, you got to go to the doctor, but not just sickness, but illness in other ways. Okay. Operations, surgery, etc. This is part of life. That's why it's important to have something in place to offset, especially when they're going to be high cost procedures. Okay, healthcare costs are rising higher than inflation. This is a reality. In this country, I'm not going to get to the politics of what you might think or philosophies, but you talk about trying to keep up with inflation, but healthcare costs have risen way beyond the inflation. And you have to keep that in mind, whether you're starting off on your path to financial freedom or you're planning for, when you're financially free. Healthcare expenses are one of the largest expenses in that third stage of financial freedom. Okay, so you have to keep that in mind. And medical expenses from major illness or serious can really be catastrophic financially. That's right. Okay, so statistics to support that is 62% of bankruptcies. 62% of bankruptcies are caused by medical expenses. Okay, medical issues. Okay, average debt for households filing medical bankruptcy is about $44,000. That means that's the average medical debt that most people file bankruptcy. You owe that much in healthcare expense. Okay, 59% of Americans with medical debt use up pretty much all of their savings. So we've talked about in another video the importance of an emergency fund, okay? And this would be an emergency. However, there are ways between disability insurance, which we talk about as well, and health insurance to offset having to deplete that when you can leverage a company's assets and income streams to do that. Yeah,
and I'll tell you a story. I have always had health insurance except for a brief moment in my life. And I tell the story because we've met people who kind of roll the dice and go without health insurance because they think they're healthy. And it was right after I got laid off from a company and was actually starting a company. And in between that time frame, I thought the Cobra was expensive, and I thought I could go 3 or 4 months without health insurance. Well, it just so happens that during that time I tore my Achilles playing soccer, and the tears came not from the pain of the tearing of the Achilles, but when the medical bills totaled $25,000. With no health insurance. Now, thank God I was able to negotiate that down a little bit, but it was still ended up being about 10 grand. That at the time, and I wasn't living the right habits financially. Obviously, not having health insurance, but it all went on a credit card, and then it was $10,000 plus 12%. Whatever the credit card was, and it kills you. I mean, it really, don't gamble and not have health insurance. It can really be bad, and that's not even a horrible scenario. I mean, if you have a heart attack, you get cancer, you get in a bad car accident, whatever, you can have things that are $100,000, $250,000, emergencies.
I've seen a $100,000 medical bill.
Yep.
Okay, I've seen that, and it's crazy. You wouldn't think so, but something that took 30 minutes a procedure, 30 minutes to perform, and the insurance company was billed $100,000.
Yep.
You know, so it's important to have, again, because of the statistics. The average hospital stay, just if you go to the hospital and you stay, is about $5,000 a day. A day. So it's interesting when people say, "Oh, I've got to pay $200 a day." That's nothing compared to what you would have to pay if it was out of pocket.
Right.
So hopefully you understand it's important to have health insurance. How do I get it? Okay. Two major factors to consider, okay, when choosing appropriate policy for you. One is the cost of premiums, okay, and two, the level of coverage that you're going to have. So let's get a little deeper into that. Jason, we've seen premiums range from $100 a month to over $2,000 a month.
Yeah.
Okay. As we've said, healthcare costs and health insurance premiums have skyrocketed way beyond the rate of inflation in this country. Okay, so they can be very expensive. Some ways to offset that and considerations, especially when you're having a conversation with a health insurance agent, is what are my deductibles? Okay, understand what a deductible is. The deductible is what the insurance company expects you to pay first before their benefits kick in. Okay, when the Affordable Health Care Act came out, I think $6,000 or $6,600 was the maximum allowable deductible for most families, most plans. Okay, to be compliant with the Affordable Care Act. Well, what that means is, aside from co-pays and things of that nature, the health plan really kicks in once you've paid the first $6,600.
Yep, and you got to be aware too, because sometimes that's per, they have a family amount.
That's right.
And the family amount can be up to $13,000
twice that, basically.
Yeah, twice that.
Exactly. So, but that's what the deductible is. The lower the deductible, the higher your premiums. So they work opposite. The less you pay out of pocket and want them to kick in sooner, the higher they're going to expect you to pay monthly.
Yeah, and it's really important to think about this because, we talk about people, when we're helping them out with their health insurance, and you often hear, they're kind of whining it a little bit about, but I have to pay $25 for this copay or $50 for this copay. If I got this insurance, my copay is up to like $75, and they're concerned about that more so than they're concerned about what is the cost per month.
Right.
And if we can get into our minds to kind of calculating what the total cost for the year is, minus a few doctor's visits along the way, maybe it does make sense to raise the deductible.
Right.
Especially if you have enough emergency reserves. It's very similar with the disability insurance.
Right.
If the more emergency reserves you have, the higher you can raise your deductible.
That's right. Your elimination period.
In the elimination period for the disability insurance, right. So if you have that mindset, you got to be okay with paying, sometimes I had to go to the doctor and pay $150. I had to get my blood done and it was $150. Yeah, but what if you're saving $300 per month?
Right.
So while it's annoying having to pay that occasionally, in the long run, it may work out better for you.
That's exactly right. And again, your particular situation may vary. There's people that have some, are more frequent visitors to the doctor. They're not. So you have to take all that into account.
Sure.
But this is why we point you to the spending plan.
Right.
Why it's critical to have that with the emergency fund, because those two together can really help you make, we've said it was a tool for good financial decision making. Those can help you make a great decision even when it comes to your health insurance.
Absolutely.
Okay. So again, higher deductible, and there are high deductible plans, okay, that are qualified, that allow you to do an HSA. I think we talk about that in a minute, which is a health savings account. So we'll talk about that in a minute. But again, the higher deductible plans mean lower premiums monthly. Okay, so that's the cost of premiums. And again, this chart shows that the higher the deductible, the further you move out, the lower the premiums. That's why it goes this way. Okay.
Right. But the higher the less your deductible, the higher the monthly premium.
Okay, so that's again in a picture form the same thing we just said. Okay, so premiums is one consideration. The deductible is really a big driver of that, and the other driver of that is the level of coverage. Well, again, the Affordable Care Act, they tried to package these health benefits in a few different, they used, metals, okay, if you will, to kind of package the level of coverage you have. And they have the bronze, silver, gold, and platinum, okay? So you see those there, starting with the bronze as the lower tier, silver, gold, and platinum being the highest tier, okay? What are the differences between the plans? The lower tier plans, they cost less, okay? But as you can imagine, you get what you pay for, okay? So they provide less coverage. You're responsible for a higher percentage of the medical costs.
That's right.
And we're not saying it's bad, okay?
Right.
We just want you to be aware of that because, again, you might be okay paying more out of pocket initially because you have enough savings.
Right.
And therefore, you don't want to pay the high premium, so you say, I'm okay with the bronze plan.
Yeah, especially if you're younger and you're healthier and you just got to calculate over time what your savings could be. A lot of times, fear drives people's decision making, and they're afraid if they get sick or something happens, they don't want to pay a lot. But if you kind of look at it more from a statistical time frame, you may go years without any serious event happening. And if you calculate your savings over that whole time, a lot of times it ends up working better.
Yeah, a good example of that, for example, if you have a top-notch plan and it costs, I'm just going to use a random number, $500 a month to have that plan, okay? Well, it covers everything, low deductible, all that type of stuff. Well, that's going to cost you $6,000 a year.
That's right.
Okay. If you don't go to a doctor, well, you just gave the insurance company $6,000 a year.
Right.
I know people who, typically men, don't go to doctors as often, and they may say, and I'm not endorsing any type of behavior, okay, but let's say you're one of those that says, I don't want to necessarily throw that money away, so I'm going to get a lesser plan in terms of coverage. So I'm expected to pay more out of pocket, but my premium is down $200 a year.
Right.
Okay. So, and these are all hypothetical numbers. So that $300 difference, you're saving $3,600 a year.
That's right.
That if you don't go to a doctor, that's money in your pocket.
Correct.
Okay.
And even if you did go to the doctor and you spent $200, you still net out.
You still have $3,600 minus a $200. Right. So you have that cushion, $3,600 to play with as far as your doctor's visits. So again, we encourage you to consult a health insurance agent to assess your particular circumstances. Now, there is a different type of plan. We've talked about the generic, most commonly known plans that you get through either healthcare.gov or through an insurance agent. There's this other plan called a medical cost sharing program. And Jason, I know you're familiar with this because I believe you use one of these.
Right. Yep.
So explain a little bit about this to our listeners.
Yeah, absolutely. So we're not recommending this for everyone, but what we're saying is they are out there, and it's an option to look at, and you should at least consider it if it may work best for you. But a lot of times they're significantly less expensive. But really what it is participants pooling money together. You get a group of individuals that are pooling money together, and a lot of times they have a religious connotation around it, so you may get a pool of Christians that are pooling money together to basically share medical expenses of that pool, of that group of people. And a lot of times they can save money because they don't have to cover a lot of the things that your normal Affordable Care Act type of coverage would have to cover. So you have to keep in mind that this isn't for everyone, but in a scenario where you really want to try to save money, but also want to have some protection there in case something bad happens, then you may want to consider it because it's significantly cheaper a lot of times. Same concept though, they don't call it a premium, but the amount that you pay every month, and they don't call it a deductible. They're really careful not to use the word insurance, okay, because they're not officially insurance. So they will tell you we're not insurance, or it's a medical sharing program. So they have different terminology, but the amount that you pay in per month can go down based off the amount of the quote unquote deductible. As that goes up, and then you don't have to pay as much per month. So same concept of how to kind of pick these plans, but at the same time, if you have a previous medical event or you have a medical condition, they may not cover you, or you may have to wait a period of time. But if you're someone who's been healthy that doesn't have any current medical conditions, then it may be a good option for you because you can save a significant amount of money.
That's right. And again, it's not traditional health insurance as we know it.
Right.
So again, that's why we don't recommend that type versus any type. We recommend you get your situation assessed personally. But again, the concept, and these aren't these, let me get together with a friend, and do this in my neighborhood. They're national companies,
hundreds of thousands of people
that are running these programs. So if you Google medical cost sharing program, you'll find some of the big companies that do this. Again, some of the faith components, some of them are faith affiliated. So if you smoke, they may not cover you in that particular program because they're trying to say, well, you may not have to need more, as much health coverage.
That's right.
Because anything associated with the dangers of smoking.
So read the fine print.
Right, that's what
make
we're
sure,
recommending.
It would work for you in your lifestyle.
That's right. So earlier I talked about high deductible plans. There are certain, and not high deductible because I think it's a high deductible, but as mandated by legislation.
That's right.
There are certain plans that insurance companies offer that are called HDA, high deductible health plans, HDHP, and they're qualified as such. If you get one of these, understand the premium is supposed to be lower than your non-high deductible plans. The strategy behind this is you're saying, I'll take on some of the risk. So as I mentioned that example of 500 versus 200 before, so lower premium, the difference you should now be able to save in what's called a health savings account, an HSA, okay? What an HSA is, and you can open these at brokerage houses, some banks, there's different institutions that open these for you, and you can, again, Google that as well. But it's a tax advantage savings account for healthcare costs. So you're basically getting a tax deduction for your healthcare expenses, which is a great deal. Okay?
Yeah, and similar to the 401k, you don't have any income limits like you could in maybe an IRA or a Roth.
That's exactly right. Okay, so this could be a great way to take advantage of taxes and health, mix them together. Okay, contributions are pre-tax and withdrawals are, so as long as they're for medical expenses, are tax-free. Interesting to this, the balances roll over year to year. So if you're allowed, now there's limits as to how much you can put in HSA every year, and again, you can Google those because they change every year to year and they index for inflation. But let's say you have $5,000 in there one year, you don't use it, it rolls over to next year, and then that next year you can add your annual contribution on top of that.
That's
okay.
Right.
So now they must be compliant with one of those particular plans, okay, which are high deductible, okay. But they're available either individually. Some employers also offer it through the group plan. Okay. So you can ask your employer if they offer that type of plan. If you don't have a group plan or you're self-employed, you can do it individually. Often is the case. Okay.
Yeah, and one really cool thing about these HSAs is it can kind of be like a little bit like a retirement plan over the long run, because you can build them up over the years, and when you reach 65, you can actually, it's kind of similar to an IRA or a 401k in that you can pull the money out and use it for whatever you would like, but then you're taxed at your income tax rate when you pull it out for that. But you can always use them for qualified medical expenses tax-free.
Yeah,
so there's really cool things with HSA.
HSAs are considered the triple down, triple hat trick, if you will, in terms of multiple benefits, tax deductible healthcare, compounding interest over time, retirement planning later, and even Medicare qualification. There's some benefits there. We won't get it. It's, again, too much to get into. We'll have a Medicare video just for that.
And then tax-free if you use for medical expenses.
That's exactly right. That's exactly right. Paying for long-term care costs. There's all kinds of fun stuff. Sorry, we get excited about that. We nerd out that way. But that's a health savings account. So again, what is the goal of health insurance? We've gone over high deductible medical sharing plans, the different types of plans.
HSAs.
But the goal HSAs, the goal of health insurance is to protect, just like any risk management strategy, protect your health and protect your wealth. Okay, we don't want life happenings. Again, we're not wishing you any ill will, but life happens. If something were to happen, we don't want medical expenses to derail you and or your loved ones from their financial goals. So to protect your health and your wealth, to ultimately get you to your financial freedom goals. Okay, so we hope this helped. We know it's a lot of information. We again want to encourage you to seek advice from a healthcare or health insurance professional, but we hope to see you soon. Take care.